Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey, Felix.
How are you, man?
Good. How are you? How's everything going?
Good. How's the weekend? Okay?
Good. Yep.
All right, good. Let's crack it. What do you got to say?
I got to say that last week was a great week. And before I say anything else, I just want to remind everybody to like and subscribe if you haven't. Really appreciate your support. And we're close to a 3,000 mark of subscribers, which is a big thing for us. And we're really proud of everything we've accomplished and of all of your help. So last week, I lost a lot of money. You guys probably saw that.
On that one trade.
I didn't technically lose, but I could have gotten $2,000 more if I exited on time, but it is what it is. But other than that, I was up almost $2,000 in that week. And I got to say, it was very turbulent for me, and I've learned a lot. And I could even say that I learned as much as I learned in the past 3-4 months doing this in 1 week. And was really powerful.
Yeah, this is so last week, I think it's important to give context. So for you, and I'm always telling you this is an incredible market right now. This is not something that's normal. This is once in a lifetime for some of these names to see names go from 10 to 100, 10 to 50, 10 to 30, even in several weeks, and then trade off the volatility to be in names 100 to 200, 300. It's not normal. It's not normal. And it's important. It's important for you to appreciate that. What we do, when you told me last week, you said, I learned so much this week. I was happy about that because, I built Options Geek for weeks like that. Anybody can say, buy this, sell that, do this, do that. But I built Options Geek specifically for these types of moments, because when the market does what it did in the last week and a half, and we're talking about up 3%, down 3%, up 3%, down 4%, 5%, up 4-5%. It's nerve-wracking. It causes people to panic, causes people to do things emotionally. And part of what, and you hear us preaching every day, is the plan. The plan is so important. Getting comfortable with the plan is so important, because what we're trying to do is, when the market is speeding up, when the market is going quick, the plan, and what we've been talking about here for the last 3 months, the plan is there to slow you down, right? To slow you down. You know what to do. So someone says, well, what do I do here? You know what to do. If you have your 3 legs in and it's a stop, then take the stop. If it's not, then you have your 2 legs, then let it go for a while. Put it at the other side. There's other things to take care of. So, I think, what you were doing, we talked after the podcast, and how, we were talking about your put spreads, and you had them on still. And what did I say to you? I said, you have your put spreads on, but you're supposed to be taking them off right here. You're supposed to be moving, right? The put spreads you have on, SPYs, you had several of them. And, you got, I know you're up money in them, and I know it feels awful, and I know it feels like it's going to go back, but we don't know what's going to happen. And we're one announcement away from something like this happening, where it goes up 15 handles and those put spreads go to nothing. You were worried about some of the calls you had on still, that you were right, 30 down 30%, one even down 50%. You said, I want to leave this and for a little bit longer. I said, that's fine. But, what you did, I thought, which you didn't say, what you did was really, really good. You did it on your own. You said, okay, you sold all your put spreads. We sold it near the lows. And then what you did was, you actually added another put spread, a different one, right? And that was good. I like that. I like the thinking, because we don't know what's going to happen. We don't know we didn't know the market's going to come back up. But, what we do know is that some of the stocks that we were holding, that we had on, they were holding. And that was good sign. That was a good sign for us. And so for you to be able to get out on the way down on these put spreads and then still throw a chip, you see the big guys do it. They long stock, they ride it for 100 points, and what do? They throw a chip at the end and buy some calls and let everything else play out how it's going to play out. And you did that. You threw a chip into the put spreads, buy put spreads, and said, I'm going to take out all these big winners. I'm going to throw a put spread in there. Hopefully I lose so that my other calls explode and do well.
Exactly, right.
And then what happened is the market does trade up. And now, I think what's important to understand right now is to remember last week and to say, okay, I didn't get stopped on, we're long GM. We like GM. We're long a Fiserv, right? I didn't get stopped on that. And look how they're trading now. And the reason they're trading that way is because the psychology of the game is people were getting out. The market was pressing everyone to get out. The market didn't allow you to win. It took it all the way down once. It rose it up high back. People got in. They threw it back down again. People at that point, many people sold, and then they took it back up again very quickly. That forms, if you look, let's look at my chart here. That forms, let's get a daily here. If you look at it, let's get a little bit closer. If you look at this, and we're looking at daily, maybe I should do, that's fine. I'll do daily, and then we'll take a look here. Can you see it here?
Yep.
What we did here was, it's even worse than what it looks here. It's even worse than what it looks, because we did this move like this. Okay. I believe it was up, and then we kind of went up, down, and then back up again. So we did something like this over 2 weeks, and this is brutal for anyone. Okay, 392 to 380, 380 to 392, 392 to 378, 378 back to 391. Okay, 391 straight down 3 days in a row to 372, 372 to 385, 385. I think in 1 day here on Friday we did the dance up and down to 73, 73 straight up, ends the day near the highs at 384ish, and from here we're trading now 387. This is a really, really crazy activity, and it's very difficult to stay long through this. So a lot of people were long here. It's very difficult to stay long. So the market was pushing people around here. Now, what's the prognosis? Well, when we were here, right around this area, okay, I don't want to, let me sort of, how do we clear this in one shot? I think the best is to just get out of it and then clear it up.
And then inspect it. Yeah.
Yeah. So save changes. No. Let me do one more time here. Okay. When we were right around here, okay, I thought it was going to be quite difficult to get to 400. Okay. I thought it was quite difficult to get there simply because we made this move here. We've had a lot of people starting to get long right here. This move to 400 is tough after having a move and starting to turn this way. And once you had this move, it was going to be seemingly tough. Now I'm actually saying you can't discount a move to 410, which sounds crazy. It sounds absolutely insane. But let me tell you, it's not a 0% chance here. It's not a 0% chance. And the reason is that what this up and down does is it takes people out. Okay, the psychology to some extent has changed. You can look at the short interest has actually picked up here with the hedge funds coming up over here, where now they have a high short interest going into even today. So the psychology has changed a little bit. And now if we get to 390 and we can be there tomorrow, you could see another 2-3 days where we go right to 400, and 400 could get you to 405 easily. I'm not saying that happens. Okay. I'm saying that the probability of it happening has just went up. And you can't discount that. You can't say, oh, well, it's, you can read all the different things in the paper. We have a few things. We have the rebalance. So by the way, we've been talking rebalance for 2 weeks now. And I showed you this here, this JP Morgan estimates up to 316 billion in forced month end selling. This, everybody should read this. This is it's actually a great article. It goes through everything we talked about. It talks about the 60/40 funds. It talks about their analysis on how they think this will transpire, on what happened maybe in February. Maybe some of it already happened. This whole downdraft was towards the end of February. Maybe people took the chance to rebalance some there. But it's an excellent article discussing exactly what we've discussed, but you're seeing it now coming from JP Morgan. JP Morgan is talking about it. Okay, so that's one. But that's on the one side. On the other side, what do we have? We have the COVID-19 relief package that came out. So 1.9 trillion is coming in, maybe 450 billion, I think, for individuals. Of that, there's estimates that people might take 1/3 of that. So it's 150 billion and might throw it at the equity markets. Okay, so that's a lot. Now, if you took JP Morgan's rebalance and maybe they did some in February, maybe there's 200 to go there and you have this new money coming in, it would be easy to say, oh, it's not going to move. So it'll be a sale, it'll be a buy, the market won't move, we'll be steady. That's conceptually what might happen. What realistically might happen is that people may come into the market at one moment and then the rebalance comes in at another moment. And so you might be, this next 3 weeks might be another crazy sort of up and down move because you have so much money, maybe at different points in time, coming into play, right? So you have everybody coming in, taking the checks and do it, or maybe they do it before and knowing that they're going to get a check in 3 weeks and saying, you know what, I should buy stocks here. So you have this at play, which is really important. And then at play, you have what I was reading, I thought it was really interesting over the weekend. We talk about value versus growth, value versus momentum. So what some are looking at, and they're adding something to it. They're saying it's not just value versus growth, because people try to figure out what happened over the last 2 weeks. It's not just value versus growth. It's value versus growth versus what they call fantasy. Okay, value versus growth fantasy. Now, what would fantasy be? Fantasy would be all these crazy stocks that go from 10 to 100. Fantasy would be stocks trading at 30, 40 times sales. And, it's a dream stock. This is going to happen. They're going to make money in 5 years and nobody knows. It's a fantasy. So it's a fantasy stocks. All these stocks that basically everybody's throwing a lot of money to. Fantasy stocks could be what? Could be ARK, right? She's in a lot of these fantasy stocks, these stocks that have, they're light on earnings and they are, big on story. Okay, so ARK, if you look at ARK, has been down from 160 down to 113. They've basically killed fantasy stocks. Fantasy stocks are down from anywhere between 35 to 50, 60%. Okay, fantasy stocks. Growth names, momentum is down, let's call it 15%, and value is probably around flat. So the market is essentially switching gears and going from fantasy to maybe growth a little bit, although they're moving out of growth, to basically value, which is what we're seeing. Things like, I would consider things like General Motors, part value, part growth, part momentum. That's sort of what the names that we're looking for here. We're trying to look for things that there's real substance. There's going to be real earnings. There's a real company. They've sold product. It's not like we're going to sell product in 5 years. Right. We're selling product now. So this value versus growth versus fantasy has now just been decimated. But if $150 billion is coming into the market, that $150 billion, where does it go? Where does it lean towards? It usually leans towards the fantasy. So they might have killed this tranche of people, but there's about to become another 150 billion, of which a good percentage is, geared toward buying these fantasy stocks. You might see that's what might push this thing to the next level, 400, 405, 410. If that money comes in droves and saying, you know what, I can buy NIO down 60%. I'll take some of that. I'll take 100 shares there, and I'll keep buying it if it goes to 30 or to 20. Right. And that mentality of, I'll take some. And all of these names are down a lot. So it's alluring to that new money coming in. Now, what does that mean for the value and the growth things? Well, I think value is where the institutions are actually sort of looking at. They're looking at the GMs. They're looking at this new trend, which is now pretty explosive. We've been looking at it. It might be getting a little bit to the end, but the new trend is dump everything that's, at work at home and buy everything that is, the market's opening up. We've talked about that a couple of weeks ago, how Melvin Capital was setting up with Visa, MasterCard, Expedia, right? I mean, these guys are very, very good. I don't care what happened with GME. They're guys you want to look at. They're guys you want to pay attention to. So that trade is actually bullish right now. You could see on all the stocks that are moving. EV is sort of off a little bit. That's the fantasy type of trade, growth fantasy. But then you have a GM Ford, which is a little bit more value plus momentum growth plus fantasy, if you will, right? When you talk about flying cars and General Motors, it's a little bit of fantasy. So this is important to understand and appreciate that what we are doing. Last week was a great week for you. I think it should have been very good for most people if you didn't panic. I think if you were patient, and all I preach in this type of market is patience. Anything that's not working in day one, day two, just slow it down. The whole point of this is when we were talking last week, you and I off the podcast, you were talking clearly. You weren't panicking. I could sense. I was asking, what are you doing here? What are you doing there? I asked you today, what are you doing in Oracle? And you said, I got a one lot in Oracle. And I said, earnings are coming up Wednesday. It's 100% winner in a week. Okay, what are we doing? I want you to do something. And so we start talking about that. We start talking about what you should do. If you don't have 3 lots, you have 1. Okay, and so how do you play it? How do you think about it? I want you to answer those questions, and I want you to be thinking about that. If you have 3, you're taking off. You're supposed to take off. You should have taken off 1. Okay. I'm not telling you what to do, but I'm telling you that that's how you should play it. So all of these names, you want to take when it's coming, because over the next 3 weeks, I suspect, again, very large moves up and down. And so we want to, I think right now in these couple of days, after you get what we just got, a W actually, where it was down sharp, up, it's more likely to continue going up, because that has now positioned people short, or at least not invested. So the next move is for people to get invested. And that's how I'm handicapping the sort of risk reward. Doesn't mean you go home without a put. We still have probably one leg out of our put spread, but we got some calls that are more into value names, which shouldn't be moving that much. And some of them are working really nicely now. So this is how we play the game. And I want to say one last thing. Yes, you made money, but if in this game, it's not about making money every month. People write me and say, well, I'm trying to generate monthly income. I want to make X dollars per month. Wrong game. You got the wrong game. Okay. Even selling options, you got the wrong game. I know people say, oh, collect $1,000, $2,000 a month. It's the wrong game. Okay. It's a probability game. So it's going to be all over the place over the course month to month. But what you should appreciate, okay, in this game that we're playing, what you should appreciate, and I always tell you, if you breaking even, Marco, that's a huge win. That is a huge win. You know why? Because the market is allowing you to take leverage. Okay, you're taking leverage and you're breaking even for the month. Huge win. Because there's going to be a moment, there's going to be a month, 2 months where you're going to start killing it. You're going to do, you're supposed to win 3 times out of 10. You're going to win 6, 7 out of 10. And that month, you're going to kill it. And then you know what? It's going to go a month where it's going to take a little bit back and take a little bit back. But if you start thinking about your trades as 10 at a time, 10 horses on the racetrack at a time, okay, then you could start seeing sort of on a month-to-month basis that, you know what? It's actually not bad. I might lose 5 times in a row, but if I hit a big one here and I hit something in, either SPY put spreads on 2/3, it still takes 2 or 3 out of, 2 or 3 losses and cancels them. You hit on an MPC for 200, you hit on a CCJ for 300, you hit on any one of these things. You're trying to play this game where you can hit 3, 4, 5 in a row, or 5 out of 10. You're going to make a lot of money hitting 5 out of 10. I promise you. And so that's the game we're playing. Break even, move the pieces around to sort of break even, and in a tough month like this, but when things are rocking and rolling, ride it, and still you're going to be taken off. So these are very, very important lessons for this type of environment. I don't see it stopping over the next, call it 3-4 weeks. We have a lot of money billions and billions of dollars coming in, coming out. Bonds are still in a place where I can't believe that it's not bouncing. So we have there's a lot in the background, but don't be fooled that the flows, the inflows and the outflows is what's going to move this market over the next, call it 4 weeks. How they come in, when they come in is going to be nobody knows. You tell me when the retail person who gets the 150 billion to put in the market, when do they come in? And then, I sort of know when 300 billion should come for sale. Maybe it's only 150, 200 billion for sale. I don't think that mix match is just going to be so easy where it's like, oh, you want to get out or get in. Okay. It's going to be, woof, people are going to come in. And then a week later, people are going to come out and everybody's going to say, what is happening here? Okay. Right. That's what I think. That's how things are going to play. I think people generally, I think people are short here in general, or they're not invested. They either have more puts than they did. Think about the average person 3 weeks ago. How many people, how about this perfect for you to think about? How many people today have the same positions they had 3 weeks ago? Long everything, long CCIV, long, XL, long all of these names. How many people along those things? Not many. Their positions is probably dramatically different than it is today. And that means what? That means they're no longer as long as they were. And in fact, some of those people now have found puts and they're like, oh, we got to be long puts. Look at this, look at that. Let's buy puts in all these EV names right now. We're getting late in that game. The stock's already down 60%. That's a little bit late in the game. We were talking about blink puts at 55 and thinking and talking and saying, at 35, you got the big guys maybe buying it. We're talking about LI, put buys when the stock's 30. Now it's getting down to low 20s. And now they're actually selling puts in September because they're indicating they're probably a better buyer. So we're a little bit late in the let's buy put game, but I can tell you, I could feel that the vast majority of people who were there 3 weeks ago, their portfolios are not the same as they were now. And in fact, some of them have found puts. It's like, oh, wow, we can actually make money on the downside because they're moving so much. So we want to be careful there. That's my 2 cents on the overall market. Last week was an incredible learning week for everyone, but make sure we understand that Options Geek is trying to slow this game down. When the market's going crazy, we're trying to slow it down. Okay, that's going to make everyone better at this game. It's going to make everyone understand what they need to do, how they need to do it. Okay, they're going to be able to. They don't have to think. The whole point is I don't want you to think. I want you to say, I'm long 2 out of my 3. And I can just push that away for right now. This one over here, I'm long 3 and I'm getting stopped. I'm going to sell it. You talked about a Zynga trade that you had. You had 3 on, and you think, oh no, you had 2 out of 3. 2 out of 3, and you asked me what, and I said 2 out of 3. Move it along. Next one. Tell me what you got here. Move it along. You want to keep moving right down the line. It's fast. The game is going fast, so you just want to go through your positions and say, this is what I'm doing. You have a plan, and you are acting on that plan. Okay. You're not saying, oh my God, the market's going to crash. I'm going to get out of all my calls. Why? That wasn't the plan. Right. This is, in fact, if we played it correctly, this is the type of market where you could actually make really good money, right? Because, if you're holding those calls and they don't get stopped and you can get out of these puts and then it rips back up and then you could reset the puts probably in the next couple of days here, then you're good. That's where you're making really, really good moves. So that's the importance of what we do in a week like last week. It's very, very, very important that you follow your plan, that that's where the confidence comes in saying, I know what I'm doing and I know how it works. And I might be wrong. I'm not trying to be right on every move, but I'm just trying to reduce the risk here, slow the game down, and just make sure if I could take some wins here, I'm going to do that as well. So
exactly.
Okay. So you played it well last week. I saw that you're gaining, disregarding the rocket where you were just all over the place. The way you handled Oracle, for example, was good. You paused on that one. The Zynga was good. You paused on that one. And it's fine. It's a trading week today, but you're not stopped. It's like you have plenty of time and you're going to allow things to play out. Right now, social media is under pressure. It's a work at home play at home type of game, type of stock. And the trend right now is, what are we going to do when everything is opened up and I can go on a plane to Mexico to stay at a hotel? That's the game being played right now.
Right.
All right.
Exactly.
Cool.
And I also want to pinpoint the in the Winning Picks Premium, the plan that you lay out and the most asked questions and the 7-day email you send out. That's really powerful for people to read every week. Just go through it and read and remind yourself what you should be doing, how you should be playing it. It really helped me out last week.
Awesome.
And also I want to show a sign of appreciation publicly here to a member that just donated to the channel $10, and he said this, Felix, if you want to read it.
Super chat. No, you guys are great. Thanks for your informative, intelligent discussion analysis of every video part. Hey, thank you. That's awesome. XB sounds like maybe it's probably sounds like Elon Musk's child is like XB65.
Right.
So whatever.
Yes.
All right, that's good. Let's talk a little bit about what we're seeing today.
Okay.
What do you got?
I got a lot of stuff, but I also got, like, I'm seeing Ford and GM being really strong, but the Chinese names being really weak.
Yes, I saw that. So let's talk about just the EV space and Tesla, NIO, the Chinese name Ford, General Motors. You could see, I mean, let's look at Tesla. Tesla was a wild one, right? We talked here and said the 600 level, it broke way through. It went straight down, and at the end of the day, traded right back up to 600. And the reason was we went through the open interest. There was so much open interest that you just got to be careful on these names when there's so much day trading going on, that they're going to bring it. They're not taking it home. They're not exercising these options. And so when I'm seeing very large positions in the front week, the market doesn't want to pay those people out. They do not want to pay these people out. So what happens is the Tesla puts, as the stock was going down to 500, it starts creeping up. Everybody who's long those puts towards the end of the day starts selling puts, starts pushing pressure on the stock up to 600. So we said 600, it did break 600, and but if you're day trading it, that's one way to look at. Let's take a look at Tesla. It's one way to look at how to play it. Let's go back for a second to the new options chain. So you see here the volume, 400,000 and 500,000 options trading in the front 2 weeks. People are trying to catch the next big move. They're trying to play, they're day trading, trying to play this next big move. In the meantime, you have a lot of open interest that starts picking up. And the open interest is what ultimately prevents the stocks from crashing. So it's like the stop signs. It's friction. It's causing friction when you got these big volumes and open interest. So people probably buying the 500s here, the 22s. They're buying the 550s, looking for a move back down to the lows from last week. We'll see how it progresses over the week, but you want to be watching that open interest, and the open interest is. Let's now take a look. I looked at it earlier because it always fascinates me. If we're looking at 500 to 600, and I look at Tesla one because it's the lead horse, right? It's the one everybody's looking to, for valuation and for what it's doing. So, you look at the put open interest for 500, 600, 500, you don't see that much, right? You don't see that much. In June, you see 550s, but after tomorrow, we're going to take a look. You're going to start seeing these pop up. So this is the day trading community in the March 12th and the March 19th. It's sort of the community that's trying to make that quick buck, that trying to make that move. But once you get past that, you see that there's a hole between what we have here. So it's I think it's important to recognize this, that it's hard to break these things. You can trade them well, but ultimately everybody who's long puts has to get out, which pushes the pressure back up. Right. We're looking, we talked about Tesla potentially hitting 500. I don't see why it can't. It's trading very weak. What does that mean for the rest of the market? I don't know. I would say it's a leader, but we talked about this level right here, right there. So can you see my, well, let's go to this thing. Yeah. We talked about this level right here, right? It's pushing this down to here is 875, 250, 250 from here would get us down to, look at that, 250 from here gets us down to 550.
Nice.
So you see that symmetry? This is, actually, it's sorry, 250 from here because it went down from here to here. So 250, that's what we got, 250 to 500. See, this is 750, so it's going to be right around 500. That's what I'm looking at. I thought it maybe had made its move right there, but that's what I'm looking at. We're looking at 875 to 6.25, 6.25 to 750, 750 to 500. Okay, how it gets there, I don't know. If it gets there, I don't know. This is a big level, decent sized level. This had a lot of volume here. Okay, on the 21st, right here. So, we're blowing through some of these things, this move here, and that was the S&P announcement. Can it go right back to this gap of the S&P announcement, 400? Absolutely, it could. I thought that it's likely to stop closer to 500. That would be my guess, best guess. Okay, so this is what I'm looking at in Tesla, and you could see people playing the front 2 weeks, but I'm showing you that the bets you could just see it on this chart here. The bets here, there's not much. Much.
Right.
So, if you want to be crafty for the more sophisticated investors, you might do something where it's, look, you can buy the Junes and sell the Marches, buy the June 550s and then sell some of these for the premiums as a calendar spread. You might be able to do a diagonal spread, and we don't do that with the winning picks premiums. But if there's a demand to talk about this stuff, then maybe we can do that as well every once in a while. It's a little bit more complicated as far as understanding what's happening and what you're playing for, but nonetheless, I want to show you that there is not much here in Tesla from 600 to 500. There's just not many puts there. Okay, which makes it, the fact that there's no puts makes it dangerous. Okay, all right. So that's Tesla. Let's look at you said GM. Sorry. So GM is a name that I really like. They came in to buy April's last week. They're probably messing around with them here over the last couple of days, but the April 60s. So I see it just looks like people messing around. The 40s are there. Looks like these, just eyeballing it, looks like these were bought and somebody sold them here. So you're going to get, because so many traded last week, you're going to get a lot of up and down on these trades. People just selling out of them. So here looks at 1119. See on the bid side, 48.4 vol. That looks like it was sold. And some of this at 1010. Let's do the time. At 1010. We're looking at 49.3. So the 50. This looks like it was bought over here. These calls were bought. But then over here, when it came to 1120, you could see the volatility at 1120 was moving lower. 48.2. Actually, it was actually a little high, but it was a little bit lower than it was below that. But it looked like we had come from, here's 1120. We came from here where they were bought to then start going down here on the implied vol. Is that fair?
Yeah, that's fair. That's cool.
Okay, so again, they're playing around in the 60s. The 60s, in my opinion, would require some news. There is no news on the calendar. I don't know if people are playing the news. I don't know if they are going after something that nobody knows. I really don't know. But there is nothing on the board that can tell me there's an event coming. But April would, in general, require some sort of news. We can frame this easily here. Okay. Got a little bit of a flag here, 57 to 49. A break of 57 would get us, right here. Break of 57 would get us, this is an 8-point sort of flag, 57 plus 8, 65. You could see a quick move to 65. How does it do that prior to an earnings, or it needs some announcement? The MACD, this is what I like about this here. You see the MACD floating up, but the MACD then also came down. If this is the way I think about it, is energy. There's energy being pushed into the stock as it's going up. The energy is being released, but the stock is not going down. The stock is holding. Okay, it's very important. This is a good sign. a good sign. Stock is holding while the energy is being released. The next move is again to press on the accelerator, and that would push it up through. What's going to do that? Probably, I think it needs an announcement, upgrade announcement. It needs something to get it through. But this is people, analysts like this stock. It's a fairly cheap stock. Though I don't think the holders that have been there for a very long time are selling this stock. So, this is a name that we really like here. Looking at $65-$70 in the near term. You get an earnings, you get something like this spinning something out, or they may, CEO Barron makes an big announcement. You can get $70 in this name, easy.
Cool, nice.
Okay, you can look at Ford too. Ford is just trading very well as well. This is trading very well. I just don't like the vol. I wish there was more volume. See how it's going up here? It's making this move up, but the volume is, it's good. It's just, I wish it was. I don't know. I kind of wish that it was a lot better. You'd have these on big up days. You had a good day here, but today there's just not that much volume. So that's a little bit of a sign that I'd be concerned about. Let's take a look, just because everybody's looking at these Chinese names, and we can look at NIO. We talked about buying puts here, and ahead of earnings, the call buying was there, and it was scary to think that the stock was moving that high and everybody's buying, setting up right up here. Stock has come off. We're breaking, if you want to frame this, we are breaking this is clearly to the eye something that, you would say, okay, this 40 level is where it should have stopped. It didn't. And so we have this from here, call it 62 to 42 is 20, and 52 to 32 is 20. Can it kind of do this move back to 32 and up? Maybe, but 40 is a stickler here, haven't broken through. The next level we're looking at is, here's a gap. You're looking somewhere, I guess, right around here, I would say 27. So where it took off from here. And then I would say, you're looking at 21 here, this gap right there.
Right.
Okay. Not that much volume here. So that's why this area, see, there's nothing here. I mean, there's not many days of activity, right? So you have something over here where it's the same thing happening. Whereas just, you can have a quick, if we turn around, a quick day, but I would like to see the stock take out the 40 level to sort of get moving back up.
Right.
Okay. And remember, 150 billion coming in. What names do they like? They like NIO. Okay. The people who are going to put the $150 billion, they like the NIOs. They like Li.
The fantasy names.
Fantasy names, right? They like Li. So you want to consider, and timing obviously is, hard to capture, but we talked about this level here for Li. Same thing. We're just trying to frame where we're at here. This is a significant move, 38 to 21. I mean, almost cut in half here. Can it go lower? Sure. People were buying the 22s and the 20 puts in Li. I think there's an earnings coming up in Li or XPEV, one of these coming up. But this one again, it's this move from 48 to 26, 22, 38 to minus 22 is 16. So we had it around here if it does this, dive.
Right.
But at some point, people will come in to nibble here, and we had a put seller. It makes sense that, they would start buying here. We had a put seller of the September 20 puts at $4, which gets you to buy the stock at 16. And if it doesn't, then they just keep the money. So, it was interesting trade, and we picked up on that last week.
Nice. Great.
Okay. So those are the EV names that, I think you could see how let's just quickly take a look. You could see how this chart and this chart is different than this chart and Tesla and this chart. Okay.
Much different.
So the market is clearly going to what? It's going towards value plus a little bit of growth, a little bit of momentum, or value plus a story with some meat on it, right? They have earnings, they've been around for 20, 30 years. You can see the psychology of the market of what's actually happening. So just look at the charts. NIO, Tesla, all the wrong way. Does that mean it can't bounce back? Or NIO, they can't, they're fantasy names. So the money starts coming in, and you could see these things ratchet back up.
Cool.
All right.
Nice. All right.
Good.
Great.
What else you got?
One I had was FireEye, call buying in FireEye.
FireEye?
Yeah,
That's
it's a cybersecurity name, right?
Cybersecurity. June's? Yeah, that's good. That looks good right there. I like that. June. So the name, every time I think of FireEye, for whatever reason, I think of Iran, because it's always about like hacking and North Korea and
Right.
things like that. And it just so happens that I was reading in the papers this weekend about Iran and Israel sort of beating each other up over media, and maybe there's something heating up there. I have no idea. But the hacking and cybersecurity is obviously a big deal. FireEye has traded. I don't think people thought it can make the move it did. It traded straight up here. So, let's just take a look. This did nothing, by the way, for a very long time. Actually came down. It did nothing for a very long time, was trading around here, couldn't break this. And then they had this breach here. And,
yes,
you hold it for years, they have a breach. And then, 6 days later, the stock does this. I mean, that's evil. That to me is like, it's evil. But here's the break. And then they take it up. You see how they have, you talk about 20 something million shares here over the next few days, probably 30 million shares trading, stocks pretty much people getting out. And then it does this. Now it's, this is, I would have liked to see something like this, right? Somewhere in here. This is a little troubling. We're doing this type of, I like to just to visualize momentum. I kind of do, this to this. You see how that tangent line is changing? It's going, this, we know this, but see, this is going this way. This is going this way. Sometimes the next tangent line on these types of things is sort of that way. Right. And I think that's, my eye is catching the curvature on this down move that doesn't like it so much. So I can see that the MACD made a huge move. The steam has been coming out of it, and you would think the next move is up here, but we're below the middle ground, which is a little worrying too. So, I would think that this could be someone buying the 20s and perhaps releasing a little bit of stock, or maybe they did release stock. They were the sellers. Sometimes they were the sellers of stock. Now they're going to be done with it. And so they buy some calls just in case it keeps on going.
Right.
Okay. So I like the buy. It looks good. It looks like they're let's analyze it. It looks like we're buying June. So there's earnings on April. So they're going to make sure that they see the earnings report. They come in here, the stock was moving up. They come in it and they buy about 10,000 calls. It looks like they have taken the offer. Okay. It looks like 58, 59, vol was up. So it looks like a buy here. Okay. It looks like a buy. What are they looking for? 20, let's call it 27, maybe 27, 26. Okay. So maybe they're looking at 26 and at 26, 27. So if we come over here, 26, 27 is already higher than the highs where it was before. So someone is looking for this type of move back all the way up over here. Someone is looking for a significant move over the next 3 months where they have good earnings and they come back this way. I don't like this curvature. I think it needs more. This curvature will need more time to make that move in one shot.
Right.
Do you see what I'm saying? Like, this curvature is a little worrying to me, because I know that this curvature is basically people are buying here, they're buying here, they're buying here, they're buying here. It's going to take people people are going to get out here. They're going to get out here, going to get out here, which is going to cause this
Right.
whole setup to take a little bit of time. And we basically got, call it 10 weeks. So I'm a little concerned. I'm a little concerned, but I do like the options trade. It is pointed to something in the name that with this move, looks like it's making sense.
Cool. All right. Fair enough. What about some puts? Let's spice it up. We haven't seen these in a while.
Okay.
Take a look at CCJ.
CCJ. So CCJ, we were long for some time. Now, if someone's still long, they put to the test here a little bit on how much they want to stay long. But we caught the move. We bought the 12s. We had bought the 12s. They went to almost 400% here, I think. And I think that people should have been at least 2 out of 3. If you're playing that last third, maybe this is a sign. Which puts are they buying? Marches,
yes.
Interesting. It goes back to, okay, I see. They're buying these. 7,000. Yep. Okay. One thing that I see here is there's also the 15s. I know the guys that are in this name. I know that they are very smart. They're not just smart directionally, they're also smart volatility wise. And so they might be just protecting their position here over the next week and a half. It's surprising that they would come in. I would have to look at the news if there's anything coming up in the next week and a half, anything in the government. This is also an EV derivative name, meaning that Cameco, nuclear energy is power that the EV industry would need as a better source of power to boost their own efforts. So if the EV compound for Cameco, the lead horse is this story of supplying the EV industry with cleaner energy. Okay, so I can understand that. If you're long, at some point the trailing stop would probably make some sense on your last leg here. So I would consider you have someone here either hedging their position or they're trying to get outright short.
Okay, nice.
Okay.
Let's take a look at Run.
RUN?
Yeah, RUN. And we just got a comment about it.
So. Solar name. So Run is a name that was running for a while. Let's see, Run. It was a name that was running. The solar energy is just, has not done well in the last 2 months. This was a $10 stock that ran to 100. This is closest fantasy you're gonna get in 1 year, right? It's up 10 times. It's crazy. Down here, let's see here. So I'm looking at the top here. Let's just frame it and just see what we're looking at, because I see something. I don't know if it's just a technical thing, but let's see if you see what we're seeing here. We have, where's the one line that you would draw? Probably somewhere around here where it's at.
Yeah, 49.
Right? Yeah, somewhere around here, right? So, but really, we're starting from over here. I'm really looking at this one, but it kind of cuts this in half over here. So we're looking at. Let's take a look at this. So I'm looking at somewhere around 22. Let's call it. Let's call it that for a second. We have obviously 100, and we have this. So, I'm looking at this too. I'm looking at this one from 100 to 68, which is how much? 32. So 32 from 85 is 53. Gets us right here. Maybe it overshot here a little bit. The flip side of this ABC, you could do it once. So it's A, B, C, D. And then what's supposed to happen in you look at these Elliott waves is you could see, and there's another wave here. You see it's 1, 2, 3. You could do it. There's waves within waves. Okay. But I'm just looking at the big wave. And but there is a wave here that could have stopped it. But the next move, could usually be You see this right here? It usually tries to recapture, right? It tries to recapture above the 85. It'll try to recapture. It goes 60%, 70% to the top. So A, B, C, D, and then boom, a shot back up this way. Can that do that? I don't know. This essentially what this does, the psychology is this takes everybody out. All these people that were riding this thing, if they lasted here, they came up here, this takes them out. This gets some people back in, then it crushes those people. It does it again right here, and then it crushes them again. It's starting to really hurt people to get people out of Sunrun. And then if it can, and it can move back up, it can go back to here. I mean, this is how it should. It's A, B, C, D, and then shoots back up 90. So what are we seeing? April
70s.
April 70s?
Yeah, quite far-fetched, I think. Yeah.
Gotcha. Is this buying? 95, 89. Yeah, it looks like it's buying. Looks like it's buying. No spreads. 126, 132, 152. Okay, so it looks like it's buying. And this smells a little bit like a somebody who might be short the name and just wants to buy a dollar option just because to protect themselves. Okay, so buy a dollar option to protect yourself in case Wall Street Bets comes into Sunrun and says everybody's short, and we could take this up really high. But it obviously looks like this is going to look like a wrong side of the mountain here. 1, 2, 3. This is not healthy, but I mean, it could move. It could make this crazy move. Give it, if it gets some momentum back, or this is a big level 50 and it drops to, you're talking about 35, and then you can see 22. So it might be someone that is just short and saying, you know what, I'll buy the 70s. You said, right? 70s.
Yep.
I'll buy the 70s for $1 just in case I'm wrong, because I don't want to get killed that it goes actually to 90 or 100. I don't want to get killed there. So this person could be betting lower. By the way, if you're short the stock and you buy the 70 calls, you're really long the 70 puts. It's like the same. It is the same trade. Okay. So that's why it smells a little bit like somebody is maybe, again, these hedge funds are going to get trickier too. They see more people looking at UOA. This is what we're doing here. We're trying to analyze what might be happening. Things are getting trickier. They know that everybody's following UOA. So if they buy calls, people get excited. Oh my God, you see the 5,000 calls in Sunrun, and let's go chase after Sunrun now. Let's buy Sunrun. But in fact, the guy is actually short stock and he's buying the 70 calls, which is basically he's long the 70 puts. Right. So you're thinking that he's getting long the stock, meanwhile he's actually shorted. Okay, so I think that's good
to know, good to catch.
Yeah, that's exactly something to think about. Something that I want you to think about. Right. Okay, what else we got?
We got also Kroger.
Kroger.
Quite a weird trade. It looks like selling puts, buying calls, but just want to run it through you and check it out.
Kroger. Yeah. Okay. Kroger, July. Okay, so we got a dividend and earnings. July 33 puts. 4,000. Spread 31.4 vol. Okay. The puts 31.4 vol. And 4,000. Okay, so that's clearly the spread, and 33.3. So they paid a little bit over for the calls versus the puts. Probably a sell of the puts. Probably a sell of the puts, buy the calls. Let's take a look at the chart. So it's probably. I'm not 100% sure, but it's probably. Kroger. Let's go back. KR. All right, let's see here. KR. 33.37. All right, 33.37. 33. 37. Kroger. Interesting. Selling these puts to get long here. Stocks 35 to sell the 37s, and you're doing that over earnings. Selling puts. So basically someone, if they were doing that, they would be getting long. Look, I think there's a lot of stock that traded between here and here, right? So if someone is saying I'd buy more stock in Kroger at 33, and it's one of these big guys, they're taking advantage of, a market that's doing what it's doing, whipping around, and they're basically widening their band around where the stock is right now. And they're saying, I'd buy the stock 35 to 33 is $2. So I'd buy the stock 6% lower. And I'll take it if it breaks out. See, it's interesting that they chose 37, because 37 would be sort of where 36, 37. You see this 36, 37 here, and then it did this dance through the four. I don't know what happened here and back. Right. So it's 1, 2, 3. So 36, 37 seems to be an area where if it get through, that it would try to keep on going. It's sort of a breakout. They're doing that through earnings. So maybe they're getting long here, and they're basically saying it doesn't matter if it goes lower. We're long the stock. We like the stock. I'll buy more at 33. But if it does go up 37, I don't want to be paying too much and out of pocket to try to catch a breakout in Kroger.
Nice.
That's what I would say. Okay. Good. Now, more questions?
Okay.
Let's see here.
I think there was one.
Because I will show you something else that I'm looking at that I think is interesting. Go ahead.
Why don't you show us what you have, and then in the meantime, you guys can ask questions, and then Phil's going to answer once he's done.
Perfect. So one thing, one name that, again, very similar to the types of names that we're trying to find here, is, well, the first I want to show you is this Facebook. So Facebook has not been going up, okay, when the market was going up, and it's been stuck for a while. And what's interesting about Facebook is, you could see the move here. You could see that this sort of seems like a level 225, but you can also see this and this right here, right? So let me take this one out. Okay. And so you got this large flag here, and we've been seeing call buyers over the last month and a half. There've been call buyers here, call buys in it, and they're targeting the 300, 305 range. Okay, 300, 305. And the interesting thing here is that Facebook is starting to, the earnings are showing good growth, right? So they're doing really well in their business. The stock hasn't moved. They're growing cash. They have 10% in cash. The problem is obviously the privacy issues that's been going on for about a year. Antitrust potential issues. The election caused problems with Facebook. But what I find really interesting is that you have value investors, which you would think Facebook, like, wow, it's a momentum growth theme. You have value investors coming in, and what they're looking at is, if we took apart the pieces, the market's not giving any value to WhatsApp. Okay. And I think that makes this an interesting story, because at some point, Facebook is Facebook. And if there is no antitrust and they keep, pumping out great earnings, then you can see a stock that has a lot of room to run. By the end of the year, it might be trading, I think it's trading like 20 something times earnings. By the end of the year, if it gets through another year where it does nothing, it'll be trading in the teens. So you have Facebook trading at a multiple, it's very low. Obviously, antitrust is a big deal, but are they going to take apart Facebook? Maybe. I don't know. This is something that is interesting to me because they're setting up here on the 305, 300, 305s, 295s. I'm looking at it. I'm what's going to be the catalyst? Is it earnings? What is it that we're looking for? And where the surprises? The surprises are, again, it's the antitrust, it's government regulation. But as far as being a cheap stock with good elements underneath the hood, this qualifies. Does it catch momentum? It's got to find something that is going to start unleashing the crowd, the momentum crowd. Say now's the time. But you can get a significant run. Let's call it from 205 to 305 is 100 points. See this right here, 205 to 305. So if I take this one out, right, you have this sort of move, and if I just basically just move that from here to here, you can get to 350, right? 100 plus 245, 345, 350. It helps me understand why they're buying these 300, 305s. I was thinking that it was somebody maybe getting out at first. We said, maybe it's someone just getting out and buying these, but it seems like someone is setting up for, if it breaks this, it's caught momentum. So this is one to watch. Breaks this flag to the upside, that means it's catching momentum. More people are buying in. And then you could see a whirlwind right through 300, 305 towards 340. Something to watch, something that, I think you put on, you put somewhere and you look at it, and every once in a while you start seeing where it's trading. But the minute it starts tackling through this, and maybe it's an earnings that it goes from earnings from here straight to 300 and then starts trading up. I don't know, but this is one to watch. That's one. And then I would say another one to give you to definitely look at is GE trading well in the last few weeks. GE is a darling over the course of the last 40 years, not so much over the last 10. But if you let's look at a 3-year chart, you could see that something is happening here. This is a level. Clearly, this is a level over 2 years that has been breached here. Something to watch. They took everybody out here. This is 2 years of doing not much. It's coming from a long way up. They're in the power industry. They're also in commercial airlines and leasing and Boeing and Airbus. They're supplying a lot of financing for them. So this is, market gets back into the groove, and we're opening up, and those businesses do well. They can pay their bills. They can pay, at least they can pay their monthly interest payments to GE. So that you got something going on here. But I'm watching that 13 level. This is obviously a lot of space here to 26, from 13 to 26. It's a thick stock. It's got a lot of problems. No doubt. There's a new CEO that came in, I believe, right around here. I forgot his name. I think it was a C. I forgot his name, but very, very, very good CEO. But he inherited a lot of problems, and it's going to take. It's been taking years to walk through those. But if they've turned the corner, then this has a little bit to run, and people are buying. You'll see people buying. They are buying calls in this particular name. Cool. All right.
Yeah, I've been seeing it every day almost on the UA. I don't really know what to think of it because there's so much open there.
Every day, right? Every day. What else? Somebody's saying, what's going on with the chip sector? Seems like it could be a buy then. I kind of agree. The problem is that they might have a lost year. People say 3-4 months that they're going to get their chips, back in action. And, the demand is there. The demand is there. But, what happens over the next 4 or 5 months where you can't actually, produce chips and produce product, and sales go way down. But, as far as what I am seeing and hearing and reading about and, looking all over the place, the demand is very much there. It's just they can't deliver. So it's odd. I find it odd too, because everybody should think once demand opens up, you have, this is the pricing power and run away. But Micron's doing well, but something like AMD, testing this 75 level, things are not it's just not looking good for chips right now. I can't explain it. I'm surprised that some of these have made such a big move down. I would think that they would give the chip industry a pass for the next 6 months and say, okay, you're going to be ready by Christmas. What's probably happening is that a lot, the chip industry and the semis, there's a lot of channels. So channels meaning people calling the manufacturers and getting on board, getting consulting calls with management, and you start hearing, maybe they're just hearing that it's not going to be in time. I was also reading that there was floods, I think, in Taiwan, and the factories are just not being able to make the amount of chips that's going to be needed. So if you get through Christmas, and then you start wondering, when is this really going to actually? I'm going to get out of the chips until I start getting the channel checks. I start calling my guy in Taiwan and saying, oh, how long are we from, he's fighting a typhoon. He's not making chips, right? So I agree. I don't understand the chips. I really don't. I would think that they would be higher.
Cool. Okay, great. All right, awesome. That was a great session, Felix. I want to thank you. I want to thank everybody for taking the time of day to come and join us. And don't forget to like the video. It really means a lot. Felix, you have any final words?
Perfect. I say, slow the game down. Make sure I always say this, on Wall Street, they used to say Adult Swim. Okay. Adult Swim, not for kids. Okay. Slow the game down. The game is going to be choppy, I think, for the next 4 weeks. Slow it down. Slow it down. You will see clearly by slowing it down, moving your chess pieces a little bit slower. Okay. And taking them off as they come. You might, I told you this today. You might love Oracle. I get it. It's trading fantastic. But you know what? Take a little bit off. Take a little bit off the table, because if the market turns, the market's going to turn. So this is what we're trying to do. Okay. All right? Good.
Cool.
I'll talk to you tomorrow.
See you tomorrow.